Good afternoon, everyone, and a very warm welcome to you all to another Carrick property webinar. It's the first one I'm doing this year, so it's great to be back, and I'm looking forward to seeing what the year has to offer all of us. By now, many of you will probably recognize me. My name is Jarryd Jacklin. I'm a private wealth manager for the Carrick Group, and I'm based out of our international office in Mauritius. And once again, I'm very excited to have George Radford with me today, who's sitting there very patiently as well, who will soon share some insights, information, and incredible opportunities available in the international property market. For those who are also relatively new to your relationship with Carrick, we are an award-winning, independent, and holistic private wealth management company, and we assist our clients globally in all aspects of their personal financial journeys. We work across multiple asset classes, in hard currencies, in the most secure jurisdictions, and only with the largest financial institutions, while maintaining at our core principles of protection, preservation, growth, and service. Now, of course, today we are discussing property, which is very often at the core of anyone's assets and financial planning for very good reasons. George will also touch on very shortly a few key points around the amazing successes that we had from last year and opportunities moving forward. And more importantly, I think the how and the why to look for these opportunities. So before I hand over, just some quick notes. If you have any questions during the webinar, please feel free to drop them in the chat box. We'll pick them up either through the course of the presentation or at the end, we'll have a Q&A session with George. So George, just before I jump onto this, thanks very much again for taking time out of your day. It's always an absolute pleasure to get insights from the man on the ground in the UK, of course. So thanks very much for joining us.
Pleasure. Thank you.
Just before I hand over the reins, a bit more fully, just some key points that we're going to go through today that George will touch on in a lot more detail as well. Essentially, what are the UK property investment hotspots for the year 2022? How can Nigerians invest in UK property? So what processes are there to follow? But more importantly, what's the easiest and right processes to actually follow? What mortgages and financing options are available to Nigerian investors? One thing that's always at the front of conversation is the importance of diversification, of course, within asset classes, but also with currency. So we'll do a quick comparison with the pound versus the Naira. And also, what's very exciting that George will go through are some new exclusive London and Birmingham launches, some new projects and developments that are available, which we're all very excited to hear more of. So George, thanks very much again. I think the best starting point is what are your thoughts around after the successes of last year, the sort of property investment hotspots for this coming year?
Brilliant. Thank you, Jarryd, and a big welcome to everyone. And thank you to you and your team, Jarryd, for putting this together and inviting me along. Yeah, I hope everyone's doing well in Nigeria. Looking forward to getting back there at some point this year. So in terms of what happened last year in the UK, I mean, it was one of the best performing years from a property growth perspective in living memory. So we saw in excess of 10% growth across the UK for 2021. A lot of locations by far exceeded that up until the end of January 2022. So the year on year up until the end of January, the growth actually increased to around 11%. So it was an incredibly strong performance by the UK property market. I think it took a lot of people by surprise. 2020 with COVID, obviously. Despite that, the market in 2020 did well. That was largely attributed to the stamp duty holiday. But even once that was removed, the growth continued. And 2021 was, a fantastically strong year for the UK market. And there was a number of reasons that really drove that. One, just the lack of supply of property, which everyone's acutely aware of. Several 100,000 units a year shortfall across the UK, which is never going to be corrected anytime soon. Secondly, inflation is driving up the cost associated with building property, and that's driving property values. It's also made some development sites maybe less viable for developers, given the cost of materials has gone up so much. So the viability of building it and selling it maybe is not quite as strong. The domestic consumption and demand has been incredibly strong. If you go back to sort of pre-financial crisis and the growth we saw in the market then, which is not dissimilar to now, probably worth adding, that was fundamentally driven by a lot of foreign money. What's very different now in the United Kingdom is it's predominantly driven by domestic money. And we're only really starting to see large volumes of foreign money starting to come into the UK, which is very positive in terms of the outlook for 2022. So, and naturally, there's a lot of people sitting out there, like a lot of clients on the call probably, who are looking for returns on investment. They're not getting anything in bank accounts. So not just retail investors, but a lot of institutional money is chasing residential assets, not just in the UK, but across Europe and tier one economies around the world to try and get a return. So hopefully that adds a bit of colour as to why the property values increase so significantly. And obviously coupled with that, you've got the low cost of lending, which is obviously favourable still, and still a relatively affordable GBP. In terms of the outlook for this year, will it do double digit again? Quite possibly. I would say conservatively, it's going to be getting quite close to that. Depending on what you're reading, anywhere from sort of 5-7 up to sort of 10% growth for this year, and that does vary across city to city. What do we like in terms of the UK at the moment? So Greater London, obviously, one of the products we'll look at today. We see a really strong bounce back in Greater London, and I'll go into that in more detail later on. Commuter London, so towns within 1 hour commute of central London, which really buy into a lot of people maybe moving out of central London and wanting to be close to work, easy, good, well connected, but still have access to the countryside. And then thirdly would be those regional UK cities, and our favourite one currently is Birmingham, and we'll elaborate on that a bit more later in the presentation.
Perfect, George. Thank you very much. I was going to say at the start when I asked you sort of what are the hotspots for 2022, I was hoping that London and Birmingham would come out. Of course, we do have 2 new launches there, and you did mention something as well about investment returns. What we'll touch on shortly when we see the GBP versus Naira. There's a conversation I have all the time with clients, I'm sure you do as well, when it comes to returns on paper and real returns and real value, and what that means to you. But we'll touch on that a little bit later. George, I think the next step, which everyone is dying to know, if they don't know already, sort of what are the steps? How can Nigerians invest in UK property, whether they have assets there already or not? What are the processes? What options are available? I'll let you take the reins on that one as well.
Okay, brilliant, thank you. So I'm just going to move off the agenda slides now and try and link this back to our business model and our services, I suppose. So I've got hundreds of clients in Nigeria, across Africa, who I've helped to invest into the United Kingdom very successfully. The process in principle is pretty simple. Obviously, there's a lot that goes on behind the scenes that makes it as sort of straightforward as possible for our clients. But fundamentally, there's no restrictions for Nigerian clients investing into the UK, and it's a very popular market for Nigerians to invest for reasons that we know. Historical ties, maybe it's linked to a child's education, and so on and so forth. So it doesn't matter where clients are based or where the properties are based, our business model remains the same, and that is, it's fundamentally important to undertake all the research and the due diligence on the developments, let's say in the UK in this instance, to ensure that any developer we work with is safe, they deliver a quality product, they're well capitalised, and our clients' interests are protected. Once that's been identified and we're happy with the development and we've got a very strong research case that underpins the medium long-term growth, both from a capital and rental growth perspective, then we will bring that product on board and give it our stamp of approval. And then it's really a matter the next stage for clients, I suppose, when the client initially comes in, is having that one-to-one consultation, which yourselves and your colleague will do, Jarryd, from a Carrick perspective, and then understanding the client's investment requirements. So, you know, what sort of budget are they working to? What are their investment horizons? Are they looking to take financing? You know, what are they driven by in terms of, you know, is it more yield focused, or is it, you know, long-term capital growth play, and so on and so forth. And then putting all those facts together and presenting the best solution for the client in terms of the property product. So once we've undertaken that consultation process, understand the client's requirements, made the recommendation, the client confirms they want to move forward, then we will essentially manage the transaction. We will appoint the solicitors, you know, and kickstart the conveyancing process. So work with the solicitors that we know and trust in the UK. And then we'll package it up. So if clients want to take a mortgage, we will facilitate and assist with that, either directly with lenders or more commonly through our network of mortgage brokers. And then we've got a in-house lettings and management business. So when the client's property completes in a year or two, we will manage that for them. And then, you know, 5-10 years down the line, once the property's increased in value and the client wishes to exit, maybe, then we'll undertake the resale. So quite a generic answer to your question, Jarryd, but hopefully it sort of encapsulates quite a few points in one go as well. So yeah, any other questions that you might have on that, Jarryd, or any questions that have come in from clients?
There are a few questions coming in, but just to sort of summarize the theme of what most of them are is, you know, I think what a lot of people, what puts a lot of people off, you know, myself as well, when you're thinking about new things, is who you need to speak to, how many parties are involved, everything you need to sort out every step of the way. And I mean, it's very, very clear, you know, why we at Carrick love to work with the likes of you. It's a beginning to end service with your Carrick advisor, you, for example, George, and it's from beginning to end, the whole step of the way, making it a smooth process, you know, so you're not having to go to different parties, trying to get this signed by that person, beginning to end, done all in-house. So I think that's a big plus for everyone who is looking for opportunities like this. It simplifies it. So otherwise,
indeed, being very familiar. Sorry to cut across you. Being very familiar with the landscape as well, having an acute understanding of, you know, some of the investment drivers for our Nigerian-based clients, but also some of the challenges which we can't sort of, you know, just brush over. It is a little bit more challenging buying a UK property being based in Nigeria than it is maybe in some other locations, but we're very well placed to assist our clients with that process. And then I think another point actually, which we never touch upon, which is very valid, is clients don't need to come to the UK to undertake this process. It can all be done remotely. All of the legal documents can be completed remotely. The originals couriered, certification meetings for sort of KYC, AML purposes can be done remotely with the solicitors. Obviously, bank transfers can be done remotely now, so it can be done from the comfort of someone's living room, essentially. Our role in this is just to manage the transaction in the most efficient, effective, and safe way possible for the client to ensure we get the desired outcome, and that is optimizing their return on investment.
Absolutely.
So, Jarryd, I just a final point before I hand back to you in a minute, I think. So in terms of the RPA business, it was founded by Richard Bradstock, my counterpart in the Middle East, myself, and then our partner Giles Ledbetter here on the ground in the UK as well. So the key cornerstones really are, as I mentioned earlier, just to deliver top quality product to our clients in partnership with, you know, the likes of yourself, Jarryd, and the Carrick Wealth and Carrick Property business, and just giving clients access to the best products wherever they may be in the world, and you know, packaged out with the best quality service. We also have a JV with One Global Property Services, who have a huge presence in Asia, and also a big presence here in the UK now, and that just enhances our overall global footprint. Gives us offices across Southeast Asia. We've already got offices in the Middle East, Africa, and the UK. and it creates a greater product flow for our clients as well. So it's a win-win situation for everyone. And then the third agenda point, I believe, Jarryd, was on mortgages. So maybe if I give a high-level sort of explanation of how it works, conscious of time as well, and then you can ask any questions that you might be receiving. So quite simply, how does the mortgage process work? So we will undertake a fact find process with clients at the outset to understand their personal financial circumstances. We will then plug that into a mortgage broker as an example, and they can then review that information and present the relevant options for the client, and if required, they can get an agreement in principle from the relevant lender that we're looking to place the client's case with. In terms of who we can help, within reason, most people can be helped. So it doesn't need, if you're a local Nigerian, absolutely fine. If you're an expat based in Nigeria, not necessarily British, albeit that does help, but any other expat based in Nigeria, again, we can assist. If you're employed by a multinational or something like that, that does help. If you're not and you're self-employed, we can still help you. Just a bit more paperwork, I suppose, company accounts and all the other stuff that one would expect, just to show sort of the performance of the business, yourself, and the income, and so on and so forth. And in terms of the different types of mortgages, we can help clients who are looking for a buy-to-let investment, which is our bread and butter, 90% plus of what we do. But we can also help clients who maybe are looking at acquiring a property for self-use, so a residential mortgage, as we would refer to them in the UK. So that's sort of who we can help and the different types of mortgages. And then we'll look at the product. So types of mortgages and mortgage products are two different things. So types of mortgages are buy-to-let and residential. And then mortgage products are, the details within those two mortgages. So what do I mean by that? Is it a repayment mortgage, i.e. over the lifetime of the loan, you are essentially paying off all the debt, which will require a higher payment per month? Or is it an interest-only mortgage where over the lifetime of the loan, you're not actually paying off any of the debt, you're only paying off the interest, the repayments are less per month, which means that your net rental income is much higher. So for clients looking for a yield, excuse me, then the interest-only option is often preferable. We can look at fixed rate mortgages and variable rates. So fixed could be fixed for 2 or 5 years as an example. Variable just tracks Bank of England base rate and fluctuates accordingly. The loan to values, conservatively 60 to 65%, which would require clients to put in, let's say, 40%, 35% of equity, and then the balance would be provided by the lender. And then in terms of, in terms of qualification process, the minimum annual income, ballpark figure, let's say 50,000. It can be a bit less pounds per annum. That's your gross income, not net. And as I mentioned earlier, clients would be pre-qualified. So the process really for us is have a consultation with Jarryd and his team. Let's understand a bit more about your personal financial needs, profile you a bit more, plug your case into the relevant mortgage broker, and then get some indicative rates on the table in terms of what mortgage product you would qualify for, and then that will dictate our investment strategy from there. Back to you, Jarryd. Any questions?
Yeah, perfect. Thank you. A couple have come through. The one which I've seen come up quite a few times as well is, I think you have touched on it already though. Do you have to already have a bank account in the UK or assets in the UK, to qualify for a UK mortgage, and or does it help? I think that's the first one, if you can maybe clarify that.
Yeah, very good question. So there are certain things that favour applications. One I mentioned earlier is got a British passport. That definitely is favourable. And if you've got an existing UK footprint. So if you've ever worked in the UK, you've got a national insurance number, you've currently got a UK bank account, you've got an existing UK property with a mortgage on it, all of that is brilliant, because that just helps to increase your credit profile to a lender that we're going to take the case to, and we'll get a better mortgage product on the table. So all of those points are definitely of benefit to clients if they do exist, Jarryd. Yeah.
Okay, thank you. And another question as well that has come through. You say the LTV is up to 65%. Is that, would you say, the maximum? If people are wanting or requiring LTVs that are slightly higher, let's say 70 to 80%, is that possible or not?
Yes, it is. You have to excuse me. My son seems to have given me his bug. But you can get higher. Going back to your previous question, it's all interlinked, I suppose. So if you have an existing UK footprint, especially if you have a UK property with a mortgage, then you can get higher loan to values on the second property because you're lower risk and you've already got a UK credit footprint. So you can get higher than 60 and 65%. I'd rather work off that as a base case scenario to be conservative. But in answer to your question, yes, it is possible. Up to say 75%, I would say, is a maximum for a buy-to-let investor.
Excellent. Okay, perfect. I am very conscious of time as well. So maybe if we move on, we've got more questions which we'll either answer at the end or as we go, you'll probably go through the information already. So we will come back to it and we'll address any other questions. If we don't have time today, of course, we'll address them personally afterwards.
Brilliant. Thank you, Jarryd. I'll just go on to the next slides now. So we've looked at a few discussion points: UK property market, how well it did, what's the outlook for this year, mortgages, obviously, how they work, how you can invest into the UK and the processes. But we haven't looked at why property is an asset class. So a really relevant point, obviously, given what we're talking about. So especially for clients based in emerging markets and African markets in particular, investing in international property, the UK more specifically, it does give you an opportunity to benefit from long-term wealth generation. We know if you buy well in the UK and you hold that for medium to long-term property, that is, then you will invariably make money. So that's the first point. Hard currency rental income, which is crucially important when the likes of the Naira, which I know Jarryd will touch upon in the next slide, just gives you a bit of a safety net, obviously, and diversification is very key, not just from a currency perspective, but from an asset perspective. So having property in your portfolio alongside other asset classes is definitely prudent and sensible. Giving you the ability to leverage your asset, it's one of the main facets that clients find attractive with property as well, especially in the low interest rate environment, is being able to leverage the purchase, enhance your returns, but also de-risk it, I suppose, because you're not putting in so much equity. Succession and retirement planning, and then children's education, both of those are massive for my clients based in Nigeria, typically, looking at long-term planning, succession planning, passing on one's wealth, but also using property as a wealth generation tool to help fund for children's education. So yeah, hopefully there's some key interesting points there for people to take away. Over to you, Jarryd, on the very uncertain Naira.
Absolutely. So all of those points that you mentioned there are at the top of the list every time we have a conversation with clients around what options they are looking for to essentially put them and their family in a better position financially. And I'm not really going to spend too much time on this because it's a topic that everyone is very familiar with, especially over the last 2 years, but you can see over the last 5 years even, which is the exchange rates between the pound and the Naira. And just to talk you through this, a story, a conversation I had many years ago when I first started helping clients within Nigeria, and we were talking about returns on paper, that we mentioned earlier, and the client I was speaking to at the time said, Jarryd, look, it's fantastic. I'm getting 30, 35, 40% returns on paper. I said, it looks fantastic, absolutely, but it's all about that real value, that real return, that real sort of buying power that you get from your assets, not just on paper. And when we broke it down, to real value by means of US dollar or pound or euro versions, what is happening to every person's wealth? Not only is it being deteriorated by real value by means of currency volatility, but then there's inflation, then there's costs and everything else to consider. So just by this graph, very simple graph, anyone who types the exchange rate on Google will come up with probably this exact same one. Essentially, the story is over the last 5 years, the exchange rate between the pound and the Naira has increased by 45% and some decimal points. Okay, so if you take a property investment as an example, and you don't even consider the rental income, the capital appreciation, purely just holding that asset in a different currency, you have put yourself in a position where you've earned essentially returns of 9% per year over the last 5 years in pounds, purely based on currency and nothing else. Even if you don't consider those previous points from the previous slide. So that's why we always say that diversification is key, not only in asset classes, and we can see the value, of course, of international property, but currency, like the pound, as an example. So that's all I really wanted to sort of highlight there. It's information that everyone knows already, but the real value is the most important, sort of now and the short, medium, and long term. So George, I'm not sure if you have anything else to say on that. It's just a sort of highlight point on that slide.
Yeah, well, funny enough, as you were talking, I was just thinking, so if you look at it another way, you've got to make 45% return over a 5-year period on your Naira asset to break even with a UK asset that's done nothing.
Exactly the same.
So,
and a very good angle, that absolutely, yeah.
Right, perfect. Let me see if the next slide will come up. And I think we're going to look at the investment options now. Here we are. So why do we like the UK? Just to recap, again, a lot of this is pretty obvious, but it's still the 5th biggest economy in the world, very robust economy, low interest rate environment. Naturally, with inflation the way it is at the moment, that will start to creep up, but not significantly enough to have any adverse impact on the viability of property investments, for sure. Exchange rate still favourable. UK is, by and large, #1 investment market property-wise in the world, for a lot of reasons. But people feel safe investing in the UK. It's familiar, British common law. It makes sense. They feel comfortable. Documents are in English, and so on and so forth. We've touched upon supply and demand. University education system is one of the finest in the world, and I'll elaborate on that a bit later in the presentation. Time zones, obviously, global hub of English-speaking people around the world, which facilitates the attractiveness of London and other cities in the UK for headquarters of certain companies. Connectivity, we've got one of the best sort of connectivity, in my view, in the world. London, you've got 4 airports within an hour of London, take you anywhere in the world. Crossrail and HS2, which we'll touch upon both of those a bit later. Strong population growth, very strong rental demand. That's why we're buying investment properties. They've got to be underpinned by a strong rental market to make sure that the property delivers. Safe haven, linking back to diversification. We know if you invest in the UK, as Jarryd just alluded to on that GBP Naira slide, you're not going to have crazy swings in your currency for a start, and that's a good starting point with any investment. Just mindful of time, so I will now flick on to the next slide. Apologise for my voice, as I said at the outset. So let's have a look at Birmingham. Birmingham for me is really the standout UK city currently in terms of regional UK cities. There's just so much going on there that's fueling very, very strong growth in the economy, but also in the property market. And I could sit here and talk for an hour or so on all of those points, but we don't have time. So in a nutshell, you've got a booming population, you've got big infrastructure projects taking place, which I'll show in the next slide. You've got one of the youngest populations in Europe, a very well educated population. You've got 100,000 odd students in Birmingham, some fantastic universities, and that gives you a very highly skilled labour force to fuel your economy, obviously. It's got the largest concentration of international companies outside of London in the United Kingdom. There's massive sort of multinationals located there. And it's just becoming a great place to live. Huge regeneration in the city centre, all the waterways being regenerated, more Michelin stars than anywhere else outside of London in the UK. Great retail shopping centre, biggest exhibition centre in the UK, Premier League football teams. It goes on and on and on. From a property perspective, a great 5 years. The next 5 years, we're looking at sort of 24-25% growth. Which is pretty solid over a 5-year hold if you bring into account some leverage. Strong rental growth forecasted for 2022, 3.5%. That's very solid. And we've got this ongoing issue, as mentioned previously, on the shortfall of residential units being available for buyers. And so long as that shortfall exists and all that exciting stuff I mentioned continues in Birmingham and the Commonwealth Games this year, which I failed to mention, the property market will continue to do well. Just one of the key things we often hear a lot about Birmingham, HS2. It's a new train line from London to the north, essentially. Birmingham is very much at the epicenter of this, albeit Manchester, Leeds, and the like will benefit in due course. That is much further down the line. The first line, HS2, is from London to Birmingham. That's a point that's often missed. The connectivity from London to Birmingham is going to be increased twofold. So currently it's around 80 minutes to get from London to Birmingham. That's going to be reduced to just over 40 minutes. So you think from a commerce perspective, that's amazing. This is also helping to fuel the local economy because Birmingham is the headquarters of HS2 project, employing 36,000 new staff. And it's creating massive regeneration within the city. And also it's fueling the growth of Birmingham Airport, which is set to increase its capacity by 40%. You think logically, if there's a massive infrastructure project, HS2 train line, bringing people into the city, it increases the connectivity to the airport, therefore the viability of using that airport, and that's driving the increased capacity that's required there. So the capacity will increase by 40% over the next decade. And that's they're spending £500 million on expanding the airport. So there's so much happening there. I'm conscious of time, so just very high level. This is a new Birmingham project, absolutely amazing development. We're working with King's Crescent Homes, 101 units in total, spread over a number of different buildings, internal courtyards, very, very affordable. So this is a great product for clients who are looking for, a very straightforward buy-to-let investment in the UK. Maybe London is not quite so viable. Maybe your total investment budget is £80,000, £100,000. Something like this would work very well for you. You can spread that over a 2-year payment plan, for example. To give you an idea, one bed's in here starting at say £200,000. Your payment terms would be, you reserve a unit, you pay £2,000. You pay a 20% deposit within 4 weeks. So on a £200,000 unit, you're paying £40,000. That secures your investment. You don't do anything until the end of next year, so almost 2 years from now. You pay another £40,000, let's say, plus some cost. The balance will be covered by your mortgage. So this is a great way to get exposure to the UK market without outlaying significant upfront deposits, while still benefiting from the growth over the next couple of years, and then spreading your cash flow over a 2-year period. Many other things I can talk about, Scholars Quarter, that's probably best dealt with on a one-to-one basis with Jarryd and the team. This is the development site here. This is the city centre. So you literally, 7-8 minute walk to the city centre, and you've got all the amenities on your doorstep. So this is great for renters, for tenants. It's great for resales when clients want to exit and to sell the properties. So yeah, it's hands down, in my view, the best available development site currently on the market in Birmingham. Just a few other images here to make it a bit more visual. This is from the top of the site. Something else I like about the jewellery quarter where this is located is it's low rise, it's a heritage area. You know, there's hundreds of sort of listed buildings, and that just creates a really beautiful environment in which to live and also to work. So this is the top of the development site from the front. As you can see, it's been very cleverly designed with internal courtyards, making sure that every unit gets, you know, a lot of light, bright. Number of units have outdoor space, and you know, perfectly set up for the needs of the modern day tenant and modern day owner occupier. So I kind of rushed over that. Apologise, but conscious of time. But in a nutshell, just an amazing and very compelling regional UK investment in Birmingham, which is, you know, the best outlook of any city in the UK for the next 5 years, in my view. And it creates an opportunity for clients to get access to UK property at a lower budget, shall we say, and better yield profile. However, you know, a lot of people still gravitate towards London. The outlook for London is very strong. So let's have a closer look at London and our new development there, Bookbinder Point. You know, a stunning new development. We are working here with Vision Homes, Vision Develop, and Hurlington. So it's a JV between both partners. And really delighted to be presenting this today. It's just launching now. Hasn't launched anywhere in the world, so we're really delighted to be presenting it to our clients in Nigeria. The development is located in Acton, West London, very fast becoming, you know, a prime location within London. You've got a lot of amenities on your doorstep: Chiswick Park, Kew Gardens, Gunnersbury Park, and it's just incredibly well connected. So we're in West London. You can get into the West End. To give you an example, Paddington, 15 minutes on the tube station. Chiswick Park is a 7 minute walk from the property, and then you can get anywhere in London. You've also got an overground station as well. So within 7 minute walk of the property, you've got a tube station and an overground station, which is exactly what you want in London. So you go to either of those stations and you can access the whole of central London and beyond. And then we've got the new Crossrail station, which is going to open up in the coming months, and that is just going to massively enhance the connectivity for Acton, and give, you know, much quicker access to the likes of central London, Heathrow Airport, and many other locations. So from a connectivity perspective, which is so important when looking at property, Acton is hugely well connected. In terms of the sort of property fundamentals, you know, 1-bed unit starting at 460. It is obviously London, so it's more expensive than Birmingham, double the price. Doesn't take a mathematician to work that out. The yield profile is strong for London, looking at up to 5% gross yield. That's very compelling for London. You know, a lot of other locations are sub 4. The development here is off plan by 2 years, let's say. So it's due to complete in Q1 2024, and the payment terms here are 10% deposit, so only 10% down, and then the balance on completion in 2 years' time. So just casting back to Scholars Quarter, that was a 20% deposit, balance in 2 years' time. This is a 10% deposit, balance in 2 years' time. Your initial equity will be quite similar, but obviously when you come to complete in 2 years' time, your equity requirement for this development will be significantly more. So an entry-level unit in here, to give you an example, you're looking at total equity of between 180 to 200,000 pounds, whereas Scholars Quarter was more like 100,000 pounds. So you can see it's double the amount of equity required from clients to access a product like this. There is communal roof gardens in this development. There's co-working space within the development as well. All units have balconies, and it's a mixture of 1- and 2-bed units. Just a little bit more information there. We would have, of course, shared a presentation with everyone, and you can have a good read over this. The 2 beds starting from just under £600,000. So there's obviously, it hasn't launched anywhere. This is the first time it's ever been presented anywhere in the world with Carrick and Jarryd and the team. So yeah, we'd be delighted to provide more information, obviously in due course on this opportunity. Just a couple of other points which I think are very relevant, especially for a lot of my clients in Nigeria when they're looking at property. What are the educational facilities in the immediate proximity? So there's 5 world-class universities within 30 minutes of the development: University West of London, UCL, King's College, LSE, and Imperial College London. So yeah, you're not going to get much of a better location in terms of access to world-class educational facilities. Shopping is obviously very important as well. Westfield Shopping Centre on your doorstep. You know, hundreds of shops and restaurants and so on and so forth. I know a lot of my clients, when they come over, often go to Westfield to buy their wife a nice handbag, whatever it may be. So yeah, that's on your doorstep. And then Kew Gardens as well, which is an absolutely beautiful place if you've never been there. And just the whole of that southwest London, West London pocket, pushing down towards Richmond, Chiswick is absolutely stunning. So a great location, a great development with a great development partner. A couple more slides just in terms of the investment fundamentals. It might look great, it might sound great, but how much money is it going to make you? If we look at Acton as a whole, it massively outperformed the wider London market. So over the last 5 years, 28% growth. Compare that to the southeast of 20%, so outperformed southeast, but it also massively outperformed London over the last years. London's been pretty flat, around 7% growth, which I think is quite interesting. That's the past. What does the future hold? So Greater London, we're looking at around 25% growth over the next 5 years, average 4.7% per year. And then from a rental growth perspective, we're looking at about 15% growth over the next 5 years. So again, very solid. Buy an asset, hold it 5-10 years, capital values increase, rental income increases. You know, it's very compelling in terms of a GBP return. And then I believe that concludes my part of the presentation, Jarryd, but sorry I rushed over it slightly. I was just mindful I was waffling on a bit, and we're running short of time. So thank you very much for the opportunity. Happy to take any questions we may have, and back over to you, Jarryd.
George, thank you very much. Extremely interesting content there, extremely interesting and I think very, very valuable opportunities. When you were showing that growth chart per year over the last 5 years, that's just the value of the property, never mind everything else that comes with it over and above the currency as well. Quite a few questions have come through. Just conscious of time as well. We'll see how much we can get through at the end. But I did want to say first and foremost, there's many people on this webinar today. Of course, we'd love to have a conversation with you, either myself or your representative at Carrick. We want to obviously speak to as many people as we can. We want to speak to all of you who took the time out to today as well. So if you do want us to sort of make sure that we know you want to be at the top of the list or as close there to there as you can, please just type yes in the chat box on the right hand side, just so we can also make sure we are following up with everyone. So you can type that in as we go. By means of quick questions, George, I think the ones that have been asked here, you have covered quite heavily in the content that you have been through. Any others that I may have left out, as you say, I think could be addressed on a one-to-one basis as well. So while people are typing in yes on there, just the process from here, if you'd like to have a more in-depth one-to-one, personalized and bespoke conversation around opportunities like this and more, please feel free to either reach out to us directly, either myself or, as I said, your Carrick representative. George knows as well, we work extremely closely with George. George will be involved with the process himself also, so you know that you have the man on the ground, the go-to person, as I always say. And you can see the value, George, we can all see now, through this presentation, by utilizing and partnering with someone like you and your company. All the research from beginning to end, the process from beginning to end, where the value is going to be and going to actually grow. when you said you sort of stagger the capital requirement from day one over 2 years, already in that 2 years, the value has increased compared to what you are actually paying for that property as well. So it's a fantastic time to get in, and I think it all speaks for itself. So I think perhaps just because of time, let's leave it at that. We'll get to answering all the questions. We'll speak to everyone individually. First of all, to everyone who attended, thank you very much for taking time out of your day. We look forward to having more conversations with you very, very soon. And again, George, thanks very much for your time, your insights, and we look forward to the next webinars, next conversations. We'll be very busy over the next few days, I'm sure. So thank you very much again.
Thank you very much. All the best. Take care, everyone. Bye.
Take care. Bye-bye.